Have you ever wondered how an unknown investor could turn $20 billion in just 2 years? Let's dive into the extraordinary journey of Jack Peterson, who made the entire financial world stand in awe. Welcome to MP Money Problem, where aspiring millionaires find their inspiration. Today, we will explore a surprising story about Jack Peterson, a quirky hedge fund manager who executed one of the greatest trades in financial history. Jack is not a household name in the investing world, but what he achieved is nothing short of admiration. In just 2 years, Jack earned a staggering profit of $20 billion through a unique investment strategy that few knew about: contrarian investing. During the period from 2000 to 2006, the U.S. real estate market was in a state of euphoria. Everyone believed that home prices would continue to skyrocket, but Jack had a different perspective. He noticed that something was off about the way mortgage loans were being approved. While everyone was rushing to buy homes, Jack decided to go against the crowd. With a keen mind and sharp analytical skills, Jack discovered that the number of subprime loans granted to individuals with poor credit, was rising at an alarming rate. This was not just a bad sign for the market. It was a golden opportunity for those willing to see the truth. Jack did not hesitate to partner with a savvy financial analyst, Alex Rivera, to delve deeper into this situation. They realized that banks were approving loans for people who could not afford to pay them back, and this would inevitably lead to a financial crisis. Jack knew that to protect himself from the impending market collapse, he needed to act quickly and decisively. He decided to invest in credit default swaps, CDS, a strategy that most other investors had never considered. With confidence and determination, Jack bet against the success of mortgage securities, a decision that would later yield enormous profits and change his life forever. Will Jack succeed in predicting the market's downfall? Stay tuned for the next part to learn about his next steps in the journey to becoming one of the greatest investors of all time. Part 2. Market Conditions and Jack Peterson's Analysis. Did you know that financial crises are not just disasters, but golden opportunities for those brave enough to see them? Let's explore Jack Peterson's deep insights and the valuable lessons we can learn from his journey. Welcome back to MP Money Problem. In the previous part, we followed Jack Peterson as he discovered investment opportunities during the impending financial crisis. Now, let's delve into the profound analyses Jack conducted that shaped his investment strategy and allowed him to reap enormous profits from the impending crisis. At the beginning of the 2000s, the U.S. real estate market was booming. People rushed to buy homes, prices skyrocketed, and advertisements for easy loans were everywhere. Banks, eager to make quick profits, began approving loans for individuals with poor credit, people who had never had a chance to own a home before. This was the moment Jack started to feel that something was amiss. Jack and Alex Rivera began to meticulously research subprime loans. They read hundreds of financial reports, analyzed loan contracts, and even attended seminars on the real estate market. Through this, they noticed that the rate of defaults on subprime loans was increasing. They examined data from various sources and found a troubling correlation between the approval of these loans and the rising unemployment rate. This led them to believe that when the economy began to decline, these borrowers would be unable to repay their debts, resulting in a severe financial crisis. Jack didn't stop at just analyzing the numbers. He also studied market psychology, how investors and consumers reacted to economic information. He realized that most people were swept up in a wave of optimism, and no one believed that the real estate market could collapse. This further solidified Jack's decision to act immediately. With the information and analysis he had gathered, Jack decided to invest in credit default swaps, CDS. This financial instrument allowed him to bet against the success of mortgage securities. For many other investors, investing in CDS seemed like a crazy decision, but Jack saw opportunity in the market's impending collapse. Jack started buying CDS from major banks, confident that their value would skyrocket when the real estate market crashed. Each CDS contract he purchased was like a building block for a sturdy structure, where he could construct his career and financial future. Throughout this process, Jack faced immense pressure, not only from the market but also from those around him. His friends and colleagues all believed he was taking too much risk and would pay the price for his decisions. But Jack remained undeterred. He believed he was on the right path and had prepared himself for whatever was to come. As the financial crisis began to unfold, Jack was ready to seize the opportunity. He closely monitored economic indicators and market conditions, and when he saw signs of collapse, he acted swiftly. The CDS contracts he purchased began to yield enormous profits, and Jack became one of the most successful investors in history. So, what did Jack do next as the financial crisis loomed? Let's look forward to the next part to explore Jack Peterson's decisive steps in his journey to building a financial empire. 3. Jack Peterson's contrarian investment strategy and lessons learned. In the chaotic backdrop of the financial crisis, Jack Peterson proved that those who dare to think differently will be the ultimate winners. Let's explore Jack's contrarian investment strategies and the valuable lessons we can glean from his journey. Welcome back to MP, Money Problem. In the previous part, we followed Jack Peterson as he discovered investment opportunities amidst the impending financial crisis. Now, we will delve into Jack's contrarian investment strategies and the valuable lessons he learned along the way. As the financial crisis began to unfold, Jack was ready to embrace the opportunity. The credit default swaps, CDS, he had purchased started to skyrocket in value. Banks and other investors were panicking as the value of their assets plummeted, and Jack felt he was in the perfect position to profit from this chaos. But Jack didn't stop at merely buying CDS. He sought to optimize his investment portfolio by diversifying his investments. He started looking for other assets that could yield high returns during the crisis. Jack invested in companies with strong recovery potential, those he believed would weather the storm and emerge stronger than ever. One of the key factors that helped Jack succeed was his ability to analyze and predict market trends. He continuously monitored economic indicators, financial reports, and news related to the real estate sector. Jack understood that information is power, and timely access to information could help him make the right decisions. As the real estate market collapsed, Jack witnessed widespread panic. Many major banks faced bankruptcy, and millions lost their homes. However, amidst this darkness, Jack found new opportunities. He began to acquire undervalued assets, properties that no one dared to touch before. Jack believed that after the storm, the market would rebound, and these assets would yield significant profits in the future. One important lesson Jack learned on this journey was the importance of maintaining a strong mindset. While the market was in turmoil, many investors panicked and sold their assets at rock-bottom prices. But Jack remained confident in his strategy. He understood that patience and determination were key to navigating tough times. Jack also learned that going against the crowd is not always easy. He faced criticism from friends and colleagues who did not understand his investment strategy. But Jack did not let that deter him. He proved that trusting one's analysis and daring to act on one's convictions could lead to great success. As the financial crisis began to subside, Jack reaped enormous profits from the CDS contracts he had purchased. Billions of dollars flowed into his account, and Jack became one of the most successful investors in history. More importantly, he became a role model for other investors, demonstrating that perseverance and foresight can help us overcome any challenge. The lessons from Jack Peterson apply not only to investing, but also to every aspect of life. Confidence, analytical ability, and the determination to never give up are crucial factors in achieving success. Jack proved that in this volatile world, those who dare to think differently will always find opportunities, even in the toughest times. Ending part 3 with a thought-provoking question. So, What did Jack do next after becoming one of the greatest investors of all time? Stay tuned for the next part, where we will explore Jack Peterson's next steps and how he continued to build his financial empire.